Welcome to Rushing, simplified news for busy investors. This is the first short daily financial audio newsletter made by a woman for the whole busy world that delivers clear headlines and quick context to help you get ready faster before the market opens. In under 5 minutes, you get the top market movers, why they matter and which sectors to watch, so you can act with less noise and more clarity. Everything we offer here is purely educational, not advice, but you heard it many times so you know this already and you are still here. Thank you for this and enjoy. Let's dive in.
First headline: Escalation of U.S. China trade tensions. What does it mean? Tit-for-tat fees hit shipping as China starts special port charges on U.S.-linked vessels after Washington's own fees, while a 100% tariff threat hangs over November and attention turns to a possible Trump-Xi meeting. Markets sold off on the headlines. Why magnify it? Trade shocks reprice growth, margins, and supply chains in a hurry. Expect wider bid-ask, headline gaps, and stress in global logistics if tariffs land. Possible affected sectors: semiconductors and hardware, multinational retailers, global shippers and ports, industrials with China exposure, volatility products, dollar and yuan pairs. Second headline: Tech and AI. Huge volatility with a snapback. What does it mean? Chipmakers led rebounds as OpenAI and Broadcom unveiled a multi-year custom accelerator deal, while Google committed about $15 billion to a new AI data center hub in India. Sentiment improved even with broader tape swings. Why magnify it? Fresh compute supply and capex plans extend the AI build-out beyond the usual players, but dispersion rises between cash flow winners and story stocks. Possible affected sectors: semiconductors and AI hardware, hyperscalers and cloud, data center REITs, power equipment, India tech and telecom. Third headline: IMF flags risk of a disorderly market correction. What does it mean? In its latest stability report, the IMF warned that complacency around deficits, geopolitics, and rich asset prices could set up a sharp, sudden risk-off episode if shocks hit. Why magnify it? When positioning is crowded and liquidity thins, small catalysts can become big drawdowns. Risk budgets and hedges matter more than hero trades. Possible affected sectors: high beta growth, leveraged credit, EM equities and debt, gold and long-duration bonds. Fourth headline: Safe havens surge. Gold prints above 4,100. What does it mean? Gold broke through $4,100, announced to fresh records on tariff worries and rising rate cut bets, with futures settling above 4,100 as well. Why magnify it? New highs can pull momentum flows into metals and miners while signaling broader risk aversion across equities. Possible affected sectors: gold and silver miners, royalty and streaming firms, commodity ETFs, jewelry retailers, FX pairs tied to risk tone. Last headline: Major bank earnings kick off. What does it mean? Wall Street banks opened earnings with upbeat signs on investment banking and trading, with JP Morgan lifting its net interest income outlook after a profit beat. Strong prints have not fully offset trade and volatility worries. Why magnify it? Healthy fee pools and cleaner credit are tailwinds for risk sentiment, but guidance on provisions and NII will steer the curve trade and regional bank tone. Possible affected sectors: money center and bulge bracket banks, brokers and exchanges, high yield and loan funds, regional banks via NIM sensitivity. That is your 3 to 5 minute brief. For the full rundown in text, check whymagnify.com. Thanks for listening to Rushing. If this helps, the best free way to support is to subscribe, turn on notifications, and share it with other people to help them as well. See you in the next episode.